So thanks for coming out. We are the lawyers, the dental lawyers. I'm Michael. This is David. You'll probably call me David and him Michael. It's perfectly fine. And together we are DMC Law. Do you guys know where we came up with the name DMC? Is it readily apparent? Yeah. Run DMC. No, actually that would be that was no, it's a David Maisel and Michael Karabash combined DMC. We thought we'd be cool. Apparently not.
That's, by the way, that's the hardest question we're going to ask you guys tonight.
There's a quiz at the end. That was on the quiz. There are no prizes. Everyone walks away with nothing. Okay, dentistlawyers.ca, that's our website. What's on our website, David?
Lots and lots and lots of information on anything you guys need to know for your business.
Okay, there's 400 blog posts. There's magazine articles, journal articles. There's lots of videos. We're recording this because we get a lot of dentists and dental professionals who like to watch our presentations, and if they're not here, they can watch it from the comfort of their home or office. We were recently featured in the National Post. That's why that's up there. So a great source. And we've also got an ebook in the top right corner. We encourage everybody to subscribe to our weekly e-blast and download our 200-page ebook. It's called Ontario Dental Law. If you ever have any problems sleeping at night, you open up that sucker. It puts you out cold. That's why we wrote it. We also have another website, dentistlegalforms.com. David, what's that all about?
Dentist Legal Forms, another great resource for dentists. There are automated legal forms that we design that if you, for example, you heard about a letter of intent and you want to draft a letter of intent for a practice acquisition, here's a way to do it. Save on your legal fees, save on time, fast, cost-effective, etc. Wills, powers of attorney, things like that. It's a one-stop shop for some of your legal documents.
So this is what the Will-O-Matic for dentists would look like. You know, your accountants and your financial advisors would say, once you've incorporated, you guys need dual wills to save on taxes and this and that. So this software that we created, which is online, which you can do from your home or office, actually allows you to do wills and powers of attorney, dual wills. I was up in Kenora last month visiting clients, and I wanted to write the trip off, so I opened up a laptop and I said to the dentist, we're going to do your wills right now. And within 20 minutes, we were done. It was great. Everyone had fun, and I got to write the trip off.
So if you've never done legal documents in pajamas and fuzzy slippers, now is your chance.
Yeah. So once you go through the online questionnaire, you can come to the download page and then download your will, follow the signing instructions, print it off, sign it in front of witnesses. Very cool technology. This is actually the dentist's will. I had to block off, I hope, most of her information. She's not watching and scrutinizing, but her name doesn't appear anywhere. And that's how our software works. We're here to talk today about
maximizing the value of your practice before a sale.
Right, and same kind of themes that George and Henry and Amy and everyone else are going to be talking about leading up to the sale. This is a crucial time. In the last 2 years, you really want to make as much money as possible, ramp up production, because we've been involved in practice sales where we represent the buyer. Practice is appraised at $1 million. And it takes a while to conclude the deal, and during that time we get updated financials and we notice the production dropped by $100,000. So we renegotiate the purchase price by $100,000, and they had to accept it. Even though it was $1 million, they had to sell for $900,000. So you really want to put all of your meat and potatoes in those last few years. Kind of like undergrad university. First year doesn't count. It's really those last 3-4 years, right?
And if you guys want any of this money, the guy from BMO who's here, we took the picture of his trunk.
Yeah. Back of his car. Going home with him. Strong team, right? We use the word team, not staff. Why? What is it? What's the difference, David?
Teams are more dynamic. They work together, it's cohesive, and also it doesn't sound as demeaning.
Right.
So who here has employees at their practice? No, you should not be putting your hands up. Who here has servants at their practice? Underlings? No? You guys have team members. And for a lot of dentists, they've had the same team members for 20, 30 years, especially when they're getting ready for a later in life practice sale. So you want to make sure you've got a strong team in place.
Right. Just out of curiosity, do you guys know what happens to your team members when you sell your practice? This is a big issue that comes up.
They get fired.
They get fired. Okay. Explain.
Why do they get fired?
The old dentist goes away, so they have to be terminated at their place of business, and the new dentist hires their place of business.
that sounds ideal for a purchaser. Now, the reality is, George, what kind of market are we in now?
We're in a seller's market.
Seller's market.
Seller's market. So what's kind of the norm that happens, David, with respect to employees in a seller's market?
The seller says, I don't want to be involved in any terminations. You inherit the staff. I'll see you later. I'll be on the golf course drinking pina coladas.
So what we see is a lot of negotiations around who's going to inherit all the pre-closing liabilities for the employees. Typically, if the team members haven't been there for a long time, it's not that big a deal. Better yet, if they have these employment contracts in place, and the employment contracts actually limit the amount of money or time they have to be paid before letting go, the purchasers love that, and that is also not a big deal when it comes to negotiating. But what you'll see is if the sellers have a lot of power, they will basically say, like David suggested, you know what, you're going to inherit the liability, all of it, for all those 20-year plus team members. And if the purchaser can attempt to do it, they'll say, listen, at least if I fire somebody in the first 3 months, cover their costs or cover half their costs or cover some of that termination costs. So there's a little battle that happens within the first 3, 6, 9 months after the closing.
But if you want to avoid that, keep practice values high, or have buyers want to climb over each other to get your practice, having team members on contracts ahead of time where there's good provisions in place will make your practice more attractive, increasing its value in the marketplace, and thus, if you remember why we're here, maximizing value of your practice before a sale. So a few years out, you're thinking about things like leases, you're also thinking about staff contracts, known as team agreements.
Yeah. Associates. Who here has associates? Okay. Are your associates on contract? Okay.
All right.
If your associate doesn't have a contract, can they leave, set up shop across the street, solicit patients, and take team members with them?
Yes or no? It's one of the easy questions.
Hands up if you think yes.
All right, we got 2 yeses
3.
only. 3.
Hands up if you think no. That's completely illegal. No court would allow that. Hands up if you just don't know.
About 25 people don't know.
Okay. The answer is the courts have said if there's no contract in place limiting them, they can do that. They can set up shop across the street, compete, they can solicit patients, they can even get records, the copies of the patient records where they were the exclusive provider of dental services. They're entitled to that. And your team members, so long as they give the principal, you, notice, they can leave too. So it's very important to have your associates on contract with those restrictive covenants. That's what we call
I
it.
think the guy in the back is thinking, is it too late? I've had an associate for 10 years, there's been no contract. The answer is it's never too late. It's never too late for anything. All you have to do is sit down, evaluate, and then make a good plan with your professional advisors, which in that case tends to be the lawyers.
Right. So teams, one of the biggest issue when it comes to getting the deal done. The other big issue is the lease. We'll talk about that.
We might have a picture of a landlord.
Team agreements? Yeah, question.
Yes.
The
question.
cost of preparing contracts for employees.
Well, the answer to every question you guys are going to ask tonight, it's the same answer. Do you know what the answer is?
Call you.
No, close. It depends. So it all depends on what you're looking for. Are you looking for someone who's just a receptionist or a chairside assistant? Is there someone with a hybrid position, part-time, full-time? What sort of things are you looking for? Do you want a dress code? Do you want an employee handbook to go along with the team members that you're hiring? So it all depends. Are you terminating first and then rehiring? Because that was, I think, an example you gave earlier. It depends.
And the ranges.
It depends. So you already know the
You
answer.
gotta start somewhere and end somewhere.
Starts at zero. Starts at zero, can go to $1 million.
If you bring me a bottle of tequila, a nice bottle, it starts at free. If the bottle's no good, it could be really
$1 million.
expensive. Yeah. So it really depends on how many team members you want to put on contract, what you want to go into the contract, but we have ranges, so we can quote you in advance once we know all the requirements.
We always, our firm, we don't work on hourly, we work on flat rate fees, so you've always got cost certainty, because at the end of the day, you're a business and you need those certain costs before you get involved in relationships.
So like we were discussing, if your associates aren't on contract, they can set up shop across the street, compete, solicit, and staff can leave with them.
Question.
Yes?
An associate contract with the principal will cease the moment the principal ceases to be the owner. Does it carry over to the next owner?
Okay, so going back to what David said,
What's the answer? What's the
is-
answer?
Yes, yes. So, for example, if the principal is a corporation and the corporation doesn't cease on closing but is combined with the purchaser, then it just continues. If it's an asset sale, there's some legalities surrounding whether the associate was an employee or an independent contractor, and it can go either way in terms of who inherits their liability. And there's also the contract itself that may say, in the event of a sale, here's what's going to happen. So there's a lot of it depends. You know what I mean? Landlord, you guys have all seen this
Oh,
person.
there he is.
Right? Smiling, happy. But what do the landlords always want, David, when it's time for a transition?
All right, landlords want everything for themselves and nothing for you. They want to collect guarantees from people. They want more money, and they definitely like to have things their way. Classic example, before Michael asked me, because we've actually talked about this before to other groups, is 3 famous examples. One, a landlord asked for something like $40,000 on one of the deals we worked on to be able to consent to an assignment of a lease, just because that's what landlords sometimes try to do. Michael, another example?
Landlord wanted 1% of the purchase price
Oh yeah, that was a
to
horrible one.
consent to the transfer of the lease.
Someone actually, because some leases, there's things known as demolition clauses. When you're working at the bank or your lawyer, you'll find out that demolition clauses are horrific in a lease for dentists and can often kill a deal, like a purchase and sale agreement between dentists. There's actually, a demolition clause has no straight definition. Essentially it says, if blank, we can just terminate the lease because it's an act of demolition. Traditionally, you'd say if we're going to redevelop the property, so we're going to take down the strip plaza and put up condos, then we're demolishing the building, your lease is over, and there might be, we give you 3 months notice. Some demolition clauses say, if you even ask us for permission to assign the lease to someone else, that's an act of demolition, and they can throw you out and try to bring in someone new who might be paying higher rents, because at the time, you're grandfathered into a really good-looking lease.
We were involved in representing the purchaser on a sale. The practice was valued at $1 million.
Okay.
Older kind of building, and there was lots of condos all around it, and the lease was horrific, and it had a demolition clause, which meant that the landlord could give notice and demolish and kick you out.
About
and
90,
pay you
about
nothing.
90 days notice.
Right. So the purchaser originally put in an offer. It got accepted when we discovered the demolition clause and realized that the landlord wasn't going to budge on it, and the banks weren't going to finance anything. We walked away. Later on, we came back with a proposal for $500,000, and it was accepted. So,
Because that, sorry,
unfortunately, $1 million practice went for $500,000 right in the heart of Toronto.
because
So,
it could
yeah.
not sell. And that's the thing you may hear from other people here this evening.
Well, George has got an example. Remember George, the one in Mississauga?
Just speak loudly for the
Not
camera.
Mississauga, but I haven't, I have an example where the demolition clause that existed, it went at 62% of the original price
So-
of the value because of the demolition clause.
So if your practice is
I'm
meant,
constantly
Sorry,
dealing
George.
with demolition clauses, and I'm going to say that a third of all the practices that get listed have demolition clauses. Some landlords will relax them. That doesn't mean they go away. They'll just say, well, here's 5 years, we'll give you 5 years, or whatever. The bank wants a minimum of 7, so we work hard to get a minimum of 7.
Actually, George
I'm not
had,
sure the example you're talking about.
well, you had another example of where you worked on a demo clause and got the landlord to agree.
Oh, this year I've had the landlords relax
Mhm.
2 demolition clauses.
To get the deal done, right?
Of-
Yeah.
4 that I attempted. So 50, I'm batting 50%, and I'm very happy with it.
Yeah, yeah.
that's a good result. No, that's a very good result, George.
So, I mean, it's tough because landlords kill deals. They delay deals, they kill deals. That's why they look like that instead of the opposite, right? Any questions on leases? Keep going. To incorporate or not to incorporate, have you guys heard of something called the lifetime capital gains exemption? Okay, some nodding. What's it all about? 750? No, it's now 800. But thanks for playing. Okay. Okay, something about $800,000. What is it? Is it free money for you? How does that work? Does anybody know?
Capital gain.
Okay. So if you have a gain on the sale of shares of a professional corporation, and there's a whole bunch of things you have to do to qualify for that, and Amy will talk about that, but if you have a gain in your lifetime, $800,000, you cut that in half, because gains are taxed at half. You apply your marginal rate, let's say it's the top marginal rate, 46, 47%. You could save upwards of $185,000 of capital gains tax if you structure your practice properly, and Amy will probably tell you to do it at least 2 years in advance because of the requirements to qualify. Okay, so we're not going to spend too much time on it because Amy's going to talk about it. But how many of you guys are incorporated? Okay, good. And there's lots of other benefits to having a corporation, including holding life insurance in a corporation, having dual wills to save on estate administration taxes, having an employment agreement with death benefits, lots of good stuff. You can income split. You can multiply the lifetime capital gains exemption by getting your spouse and children and parents involved. Lots of good stuff. Okay, the process of selling. How does one sell? You put together a professional team, right? That's me in the middle. It's George beside me. David's not even there. Appraisal. And you guys have heard George talk about an appraisal. You
It's not off.
get your appraisal done, and then the purchaser would submit a letter of intent. So, letter of intent, as you already heard, has the key terms of the deal. David's going to explain the letter of intent wizard that we created on our website, dentistlegalforms.com.
So essentially, again, you can do this in the comfort of your own home, pajamas, fuzzy slippers. You're going to log in, you're going to get yourself a little password, you're going to get yourself a login name, you're going to answer a series of questions. Real easy. What's your name? How much do you want to pay for the practice? What's the address of the practice? There might be some drop-down boxes you choose options from. Is it a share sale? Is it an asset sale? Real easy stuff. If you don't know all the answers, that's okay. Usually everything works out fine. You speak with your lawyer as well, tidy up anything, but for the most part, you're going to go through and check off the diligence issues that you want to do, make the purchase subject to getting the lease assigned, getting financing from your bank, doing a chart count or a chart audit, doing an equipment inspection, things of that nature, having your lawyers review everything. And that's it. So within 15-20 minutes, you can fill out an entire form and be ready to make an offer on a practice.
The reason we created the software is because purchasers were coming to us with napkins, 2 signatures, and a purchase price on it. And we said, what do you want us to do? I mean, we have to negotiate everything now. Had you done this and agreed on the key terms concerning the lease and the team, the accounts receivables, the purchase price, the deposit, the conditions, the whole shebang, our life is much easier. So that's why we made this, to make our lives easier. And as George says, we're the ones driving the train, right? Due diligence. What kind of things, well, David, you mentioned some things. Let's ask the crowd. Who remembers what is part of the due diligence process?
Let's see who's paying attention to what I just said. Shout it out if you know it. Just shout it out.
So the purchaser wants to make sure they're buying something that's good. So what kind of things are they going to do?
Chart audit financials.
Yep, chart audit, equipment inspection.
Heard lease over here.
Mm-hmm.
Team contract.
Yeah.
Team contracts. Well, good use of the term team.
We during our due diligence on a deal we're working on now, discovered that such a smooth deal. Can't believe they agreed to that purchase price. Started doing our due diligence. The selling dentist is bankrupt. So.
And doesn't even have the right to sell that practice.
Right.
So you gotta look twice, cross some T's, dot some I's.
Formal agreements. Once the letter of intent has been agreed upon, the due diligence is done. Now comes the paperwork. Lots and lots of paperwork. The formal agreement of purchase and sale. Who here has seen one? They're about 40 pages. They've got another 300-400 pages
They look
of
like
schedules. Yeah, it's pretty brutal. A lot of paperwork. A lot of trees die in the process. But that's got all the bells and whistles. That usually takes a few weeks to negotiate. Hopefully, if the lawyers know what they're doing and what they're looking for. Closing, our favorite time. So when you buy a house, on the closing, there's an exchange of documents, there's an exchange of money, and there's all this paperwork that has to be signed. So this is actually in our office. I'm a tequila guy, I mentioned it. I don't see any tequila here. Nobody brought me anything knowing I was going to be here. But we have all sorts of wonderful tequila, and then we have dentists sign stuff, and they only drink after they sign. That's the rule, right? So and that's David in his office back there. You can see his back turned towards me as I took the picture. like I said, exchange of money, exchange of documents, post-closing. Who here recognizes this still from a movie? There's $5, $5, David's own money. If you can tell me which movie this is from.
In the back of the banker's car.
You guys are really young. What year were you? Okay, this is from a movie called Office Space, and that is the world's worst boss. Okay, so sometimes dentists have to associate afterwards for the young pups that just paid for their retirement, and hopefully things turn out well. But sometimes you end up with some guy like him. Post-closing, what do you do with all your money after you've sold? Well, you can take some trips with us because we do presentations about all sorts of topics. This one is next week in Bermuda through Western. That's Turks in March. This one is David going to Disney. He really lucked out on that one. I really wanted to go to Hawaii. I'm doing a 7-day Caribbean cruise. We've got this Jamaica outreach program for dental students and dentists. Basically, Sandals donates rooms for free to dentists and dental students who want to come down and help out. That picture that's me, the guy in the red shirt, not Elmo. And so we're involved in all that stuff, and that's it. So let us know if you have any questions.